You ever wonder how the stock market really works? Well, here's how it really works in 60 seconds. No. 1. Someone innovates. The whole stock market system starts with someone who has an innovative idea for a product or service. This person might be an inventor, a scientist, a researcher, or just someone with a great business idea. But they all share one thing in common. They need money to turn their idea into a reality. Number 2, they go public. To raise money, they'll go public by offering shares of their company to the public. When a company first goes public, it's called an IPO, or initial public offering. This is when the company's shares are first offered for sale to the public. No. 3. The shares are bought and sold. Once the shares are public, they can be bought and sold on the stock market. People who buy shares in the company become shareholders, and the company uses the money from the sale of the shares to fund its operations and growth. Number 4. Prices fluctuate. The price of a share of stock represents the value of a small piece of ownership in a company. And like any asset, the price of a share of stock will fluctuate based on supply and demand. If more people want to buy a share of stock than sell it, the price will go up, and if more people want to sell a share of stock than buy it, the price will go down. No. 5 companies make money. Once a company is public, it can raise money by issuing more shares of stock. They may do this to fund new products, services, or research and development. By issuing more shares of stock, a company can raise money without having to borrow it or pay interest on it. Additionally, the company may use the money from the sale of its shares to buy back its own stock, which can increase the value of the remaining shares. This is because when a company buys back its own stock, it reduces the number of shares outstanding, which increases the value of the remaining shares. No. 6. Investors profit. If a company is successful, its share price will rise and shareholders will profit. There are 2 ways that shareholders can make money in the stock market. The first way is by buying low and selling high. This is where a shareholder purchases a share of stock in a company at a low price and then sells it at a higher price. The second way is by holding on to their shares for the long term and collecting dividends. Some companies will pay their shareholders a dividend, which is a portion of the company's profits. By collecting dividends, shareholders can earn a steady stream of income from their investments. In conclusion, the stock market is a powerful force in our economy. It allows innovators to raise money to fund their ideas, and it gives investors the opportunity to make money by owning shares in public companies. Whether you're a shareholder or an investor, it's important to understand how the stock market works so you can make informed decisions about your money. Do you now understand how the stock market really works? Leave a comment below.